Hello and welcome to this live programme from Baillie Gifford, the latest in a series of webinars where we talk to the managers of the business's different investment trusts. Today we're talking to Rosie Rankin, Director of the Baillie Gifford Keystone Positive Change Fund. My name is Natalie Breen from Citywire, and I'll be talking to Rosie about the themes the Positive Change team have been exploring so far and their outlook for the year ahead. Rosie, thank you so much for joining me here today. We've certainly been feeling the effects of the perma crisis of 2022 and following through into the beginning of this year. But as ever, you guys remain long-term conviction managers. So how have you been able to look beyond all of the noise and the media anxiety? And what themes are you exploring for this year?
Yes, you're right, Natalie. I mean, it certainly felt like a real perma crisis since the start of 2022. And I think what has been really helpful for us is just remaining firmly focused on our dual objectives. So within Keystone, we are seeking to invest in that small number of companies who can generate attractive returns and who can contribute towards a more sustainable and inclusive world. And I'm pleased to say that the pipeline of ideas for the company remains really rich. So, for example, within our environment and resource needs theme, we're exploring opportunities in the energy transition, the electrification of transport, carbon capture. Within healthcare, there are lots of exciting ideas in the areas of increasing our understanding of biology or treating diseases. And then within social inclusion and base of the pyramid, we're looking at companies that can either provide access to basic services or can help to build people's financial resilience and financial health.
Super. We're definitely going to dig into some of these themes throughout the course of the next 20 minutes or so. But can we start perhaps by looking at how performance has been so far to date and some of the contributors to this performance?
Yes, I'm really happy to do that. In terms of performance, Keystone has just released its interim results, and I'm pleased to say that over the last 6 months, performance has been positive. So net asset value has increased by just over 14% and share price total return by just over 9%, both ahead of the index. But I'm very conscious that is just 6-month performance. We were appointed managers of the trust 2 years ago in February 2021. And we're really conscious that over that time period, performance has been behind the index. But of course, overall, our investment time horizon is 5 years plus, and we do aim to outperform by 2% per annum over those 5-year periods. So yes, just wanted to put that short-term positive performance into kind of that longer-term context.
Now, what have been some of the contributors then to the short-term performance in particular?
Yes, it's, I think, helpful to look at both sides of the coin in terms of some of the companies that have detracted from performance and some that have really contributed. Just looking at that 6-month time horizon, Tesla has been one of the detractors from performance over that period and seen weaker share price performance. I think as the market reacted to concerns about increasing competition in the electric vehicle market, and also whether Elon Musk's acquisition of Twitter was proving a distraction for him. Now, competition has definitely increased in the EV market, both from electric vehicle startups and from traditional car manufacturers. But, we're really confident in terms of Tesla's strong competitive position. In terms of looking at those EV startups, many of them have managed to raise billions of dollars over the past few years to help production begin. But funding is becoming harder to come by, and we can see many of the newer EV competitors starting to scale back their growth plans. And of course, on the traditional car manufacturer side, they're often struggling to be profitable on their electric vehicles because they've got the challenges of their legacy manufacturing sites and skills of their workforce. But we're really pleased that Tesla has managed to consistently reduce its production costs. It's got very good vertical integration and a real emphasis on efficiency. I mean, it aims to produce 2 million cars this year, which is quite incredible, thinking that a decade ago they just produced 10,000. And then there's the energy division, which is growing at a really decent clip as well, kind of over 148% growth in the last quarter. So I think lots to be optimistic about there, despite the recent share price weakness.
See, when you have a company within your portfolio, you've got a long-term view on it, but how long does it take until you start kind of monitoring one of these underperforming companies, and what's the kind of process like for then moving them on? You know, you were a low turnover portfolio anyway, but what is that? Could you talk to us a little bit about how that process actually plays out?
Yes, absolutely, because I think you're right. We want to be patient, we want to be perseverant, and we want to be long term, but we don't have infinite patience or perseverance. And I think for us, the key differential is whether a company is having some short-term weakness, either due to market sentiment being against it or some short-term operational difficulties, in which case we want to be supportive of that company, providing it's staying true to its long-term vision. However, if we think that a company's challenges are more deep-rooted, that perhaps it's got really persistent operational challenges, or that it's changed strategic direction, then we will move on. A really good example is a company that we sold from the portfolio in the autumn of last year, a company called Berkeley Lights. Early stage biotech business, made machines that allowed clinical researchers to do single cell analysis. A really interesting and innovative technology, but the company were really struggling to commercialize that technology. And actually we felt that their struggles around that and some quite concerning levels of management churn within the company as well were really indicators to us that it was time to move on from that company, and we sold that in October of last year.
So I suppose the flip side to that is, how long does it take to onboard a new company, and have you added any new names to the portfolio recently?
Yes, absolutely. And almost the answer to that is, how long is a piece of string? Because sometimes it takes years of getting to know a company and to build up our knowledge and conviction. And at other points, it can be a relatively quick process. So we have added 2 new names to the portfolio since we last spoke. One is in base of the pyramid, a company called Remitly, and the other is in environment and resource needs, a company called Autodesk. And really happy to give you a bit more information about those, if that's of interest.
Yes, please do.
Yes. So in terms of, first of all, Remitly, we've been looking at this company for a couple of years. What they do is they provide a means of people to remit money. Now, what do I mean by that? Well, their core customer would typically be a migrant worker who has perhaps moved to Europe or the US to work and wants to remit money back to relatives or friends in their home country. Now, the size of the remittance market is huge. It's estimated it's about $600 billion that is remitted globally every year. Now, that is more than the total amount of government aid that is given to developing countries. And what these remittances are typically used for by the recipients is to pay for housing costs, food costs. And interestingly, about 25% of remittances go towards paying for education. So it's a really powerful way of capital being deployed to improve living standards and educational prospects in emerging markets. Remitly is a mobile remittance platform. It allows people to transfer money much more quickly and easily and more transparently than traditional providers of remittance services such as Western Union. So we're quite excited about the impact case and the investment potential. We looked at Remitly, interestingly, at the time of their IPO, which was about 18 months ago, but we just felt it was quite richly valued at that point. Now, since then, their share price has come off about 70%, which made it much more attractive from an investment point of view. And they were also kind of showing that they were building up that business and building up their user numbers. So we were able to have greater conviction that it was the right investment for the portfolio. So invested in Remitly just at the very end of 2022. That was Remitly. In contrast, the other company that we bought, Autodesk, completely different company. It's within our environment and resource needs theme. If anybody participating on the call today has a background in design or product design, they've perhaps used Autodesk because it's computer-aided design software. Now, why on earth do we like this from a positive change perspective? Well, there's two main reasons. One is Autodesk is a core piece of software used in the construction industry. And the construction industry is an incredibly wasteful industry. It's estimated that about 40% of landfill is occupied by excess materials from the construction industry. And anecdotally, it's said that for every 4 houses that are built in the UK, a 5th ends up in the skip. So Autodesk's construction cloud platform allows architects, designers, builders, project managers to communicate in a much more efficient way and hopefully reduce that waste. And the other aspect that we really like it for is in terms of its artificial intelligence aided design, which allows architects to be much more conscious of the environmental footprint of the buildings that they're designing. And the software can suggest ways of improving environmental efficiency and reducing carbon intensity of those buildings. So 2 completely different companies, but both ones that we're excited about.
Now, I know I said I would be taking questions at the end, but I've seen one that just popped up, which is very relevant to what we've been talking about here. So I might turn to it quickly. Yeah. One of the viewers asks, are the new names coming up? Is there any kind of cross-pollination between different Baillie Gifford teams? Is that an area of research for you? And in particular, they mentioned the global discovery team. Are you working in collaboration to find names across the themes that you're looking at?
Yes, colleagues can be a rich source of ideas for us within positive change. So to give some idea, about 90%, so 90% of companies in the portfolio are owned somewhere else at Baillie Gifford. It might be in a regional strategy or a global strategy. The highest single amount of overlap is in a strategy called long-term global growth, which is about a 25% overlap. And you could expect that kind of size of overlap to endure, because we share one of our 2 objectives with all of our equity colleagues, that of seeking attractive growth companies. So we do a lot of collaboration across the investment teams in terms of idea generation. And it's not just on the listed side, it's also with our private companies team, of course. Within Keystone, we can invest in private companies. So working with our colleagues within the private companies team is a rich source of ideas as well. So yes, great question. And yes, we do a lot of work with colleagues.
Super. So as you touched on there, obviously you're growth investors, and it's a tough time to be a growth investor. How resilient are the portfolio holdings against this kind of challenging inflationary backdrop?
Yes, you're right. It's a tough time to be a growth investor. And of course, whilst we're thinking about the long term and we're wanting the companies in the portfolio to really thrive over the long term, they need to survive in the short term, which is really, why resiliency is important. When we think about resiliency, we're thinking about it at the individual company level. So when we're looking at our companies within the portfolio, we're thinking about elements such as, well, how resilient are these companies to rising interest rates, for example? Now, within the portfolio, across the portfolio, the level of net debt is about half of that of an average index company. So levels of debt are quite low across the portfolio. But we want to be really conscious about the kind of rising cost of debt to companies within the portfolio and explore any vulnerabilities there. We also want to think about resiliency to inflation, recognizing that companies are seeing increasing costs in terms of inputs. And we want to think about whether companies have the pricing power to enable them to withstand those inflationary pressures. So we've seen a number of companies across the portfolio raising their prices over recent months, whether that's Christian Hansen, the Danish bioscience business, or Ecolab, a US chemicals business. And of course, we want to see companies exercising pricing power responsibly within positive change. So whilst we want to see them remaining profitable, we don't want to see them being egregious in terms of the pricing increases that they're putting through. And I think thirdly, and maybe this is the most important point in thinking about resiliency, is this is a portfolio of companies that are doing something very important for society and the environment. They are generally companies that people really value. And so generally their demand is quite resilient in the face of kind of macroeconomic pressures. They're generally companies that people value and need.
On that then, how resilient are they to geopolitical factors, and how have they been faring this year with rising tensions, obviously between China and the US, and not least the war going on? How has that played out amongst your holdings?
Yes, you're absolutely right. I mean, sadly, there does seem to be rising geopolitical tensions in a number of areas of the world. I think firstly, it's important to say that we're not macro investors, so we don't take a top-down view of the portfolio. And also, we're very diverse in terms of geographic exposure. We have companies in over 16 different countries. And I think, again, similar to how we're thinking about resiliency in terms of the inflationary backdrop, we think about geopolitical resilience in terms of individual company exposure. So, for example, when we're thinking about rising tensions with China, if we're looking at a European or US domiciled company that exports a significant amount to China, we then want to think about, well, how will their business be affected if those exports become limited in future? So we want to think about it in that individual company context. And of course, sometimes geopolitical tensions provide opportunities because the companies we invest in are solving some challenges relating to them. A great example is Deere, the manufacturer of agricultural equipment, which was a very strong contributor to performance over the course of 2022, as their precision agricultural machinery allowed farmers to reduce their input costs in the face of rising costs associated with the Ukraine war. So we do see companies helping to kind of mitigate some of the risks associated with geopolitical tensions.
Let's move on slightly, shall we, and look at engagement. Everybody says that they do engagement nowadays, but what does it mean to the positive change team, and what does it mean to do engagement properly?
Yes, it is really important to us to do it properly. I think it's important at the outset to say that within Keystone, we invest in 40 or so companies that we really like. And they are generally, in our view, exceptional companies that are doing something very positive for the world. So how can we add value through our engagement? What we want to do is offer supportive engagement to encourage companies to pursue their positive strategic direction. But of course, we will challenge companies where we feel that things could be improved. It's maybe useful to give you a quick example of what do I mean by kind of supporting a company in their positive direction. So we invest in Nubank, which is a Brazilian bank. It's now in just a number of years, the world's largest digital bank. It has about 60 million customers in Latin America. And it's really pleasing to see the financial inclusion that they facilitated. But we were starting to wonder, whilst it's a very positive thing to include people financially, how has that actually affected their lower income customers? Has having access to a credit card and a bank account actually improved their financial health? We commissioned a consultancy in Brazil to do some work exploring that very question. And then we engaged with Nubank and sat down with them and the Brazilian Central Bank to discuss the results of the finding in terms of encouraging them to think about that lower income segment of their customer base and how their products and educational initiatives can really continue to help them and improve their lives. Now, we didn't change Nubank's strategic direction, but we've hopefully supported it, provided some additional food for thought. And that is the kind of engagement that we think over the long term can add real value.
Absolutely. How do you then translate all of that work that you've been doing with the companies? How do you then actually communicate that to clients and show the meaningful impact that you've had on those 40 companies that you invest in?
Yes, we produce an annual report. It's called Keystone Positive Conversations. The most recent report came out in February of this year. It covers the whole of 2022. And yes, it covers every single engagement that we've had within the portfolio, and also explores aspects of companies' business practices, such as their attitude towards the environment and their approach to governance. So a really comprehensive report, which hopefully is of use to shareholders.
Another resource that you have available is a great series of podcasts, which I was listening to in anticipation of this interview. And something really struck me that Kate Fox, one of the lead portfolio managers, said. She talked about the second deep transition, which I thought was a really articulate way of kind of describing where we're at in the globe and the global transition at the moment. Could you talk to us a little bit about what she means by second deep transition and the impact that has on the portfolio?
Yes, I'm glad you enjoyed that podcast. The Deep Transitions Project is a project that we're involved in. It's being led by some Dutch academics and bringing together a range of asset owners and managers thinking about this deep transition. Now, what do we mean by that? Well, looking back, the last deep transition was really the Industrial Revolution. Now, that has had many positive benefits for living standards and longevity and the way that we live today. But there has been some kind of unintended negative consequences, not least our reliance on fossil fuels. And thinking about the deep transition that needs to come next, it's really about righting many of those wrongs of the first deep transition in terms of the Industrial Revolution. It's recognizing that we're on an unsustainable path currently. in terms of our energy usage, our usage of the world's resources and the social inequalities that we're creating. So it's really thinking about what is required in terms of transforming our systems. And it's also exploring these two concepts of whether you want to just invest in companies that optimize your current system or really transform a system. And I'll give you a quick example there. I've already talked about Tesla and electric vehicles. Now, electric vehicles optimize the current system of everybody owning and driving their own car. It's a better way than internal combustion engines. But systems transformation would be moving to autonomous vehicles where you don't own a car at all, but use cars as a service. So it's just thinking about those, those really deep-rooted transformations that will change the way that we live.
So then perhaps a final few points from this kind of formal part of our interview before we turn to some audience questions. What areas of systems transformations has the team been researching, and have you been able to be out in the field accessing any of these new companies? Could you talk to us a little bit about that?
Yes, and we're researching such a range of different kind of opportunities at the moment. So, for example, the team have been out to India to think about the companies we were researching there were mainly in the areas of financial inclusion, but also in the areas of Indian healthcare, recognizing as, well, India is now the world's most populous country. It also has now an aging population. And sadly, lifestyle diseases are also becoming more prevalent. So how will India cope with the demographic challenges and the healthcare challenges associated with that? So thinking about that. We've got a trip coming up to China to explore different companies involved in various aspects of the energy transition. And interestingly, we've been doing some work. Now, it sounds very mundane, but I think on HVAC, so heating, ventilation, and air conditioning. Now, sadly, as the world's temperature increases and weather becomes more extreme, our need to